Interesting thing about the bond market is the market will punish the monetary authorities if they don't fix things themselves. That's been the most interesting thing for me. The point is, if the Fed won't tighten conditions, then the market will, right? That's like the market is saying, fuck you. We want rates higher. Everything is up against the dollar. This microphone up against the dollar. So saying gold is outperforming the dollar is nonsensical and stupid. This mouse is better than the dollar. This water bottle is more expensive this year, last year, because it's priced in dollars. So like, that's not a real thing.
Bitcoin is often seen as a leading indicator of dollar liquidity due to its 24/7 trading and responsiveness to global events. Recent Bitcoin volatility might be linked to changes in interest rates and liquidity conditions, with potential impacts from recent rate cuts. There's a debate about how interest rate cuts impact dollar liquidity, with some arguing that lower rates might force capital out of more liquid markets into other investments, affecting liquidity. On this note, Jack Mallers and Dylan Liato, in a podcast interview with Bill Mallers, delve into a deep analysis of the financial markets, particularly focusing on Bitcoin, interest rates, and their impacts. Jack acknowledges that the financial markets are showing strong year-over-year gains across various asset classes, including stocks, gold, and real estate. Dollar Bill, on the other hand, believes that continuing to trade long in this environment is a sound strategy, given the broad gains across asset classes. The interview touches on the roles of the Treasury and monetary authorities in managing liquidity and the potential consequences of their actions on markets. Watch clips from the interview for further insights into Jack Mallers' conversation with Dollar Bill. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
But his point is that money market fund managers, which, money market fund managers manage a lot of the like dollar liquidity in the world, and the reverse repo, the RRP yields 5.3%. is what he writes, and funds will be invested in T-bills if their yield is slightly greater. Starting mid-July, the 3-month and 6-month T-bill yield dropped below the RRPs. And so basically these guys are swinging their capital between these facilities, and one facility is far better for dollar liquidity than the other. And so when Powell came out and made his remarks to basically warn the market that he was absolutely going to cut, and they started getting it priced in, that the money market fund started rotating their assets into different instruments that were more bearish liquidity. And so the expectation, and then I think what happened is Bitcoin reacted to that first, and then the S&P started to get smoked too. And his opinion is that Yellen is going to come out and give liquidity somehow, because to your point, I agree with you. They can't afford, especially in an election year, for assets to get smoked. So if the market is saying, oh, you're going to cut rates, well, that means I got to go park my capital here, and that's not good for liquidity's purposes. And they're going to have to fix that. So Arthur shorted Bitcoin into this weekend, and he actually closed his short because he said, I bet Yellen's going to have about enough sometime soon. So Bitcoin slid, and then you saw it rebound like 2-3% Saturday and into Sunday. And so I don't know, I guess for the audience, that's kind of interesting, is that rate cuts isn't necessarily good for dollar liquidity based on all of the Treasury's involvement over the last few years. Really, Yellen was the one that kicked off the Bitcoin bull run and the asset bull run at large in late 2023, really. And so I think we should all just look out for Janet Yellen, how she's going to finance this debt, how she's going to find liquidity, and Bitcoin usually sniffs this stuff out first. Interesting thing about the bond market is the market will punish the monetary authorities if they don't fix things themselves. That's been the most interesting thing for me. Once it hit, Treasury hit 5%, was it? When did Yellen come down and say, I've had enough and I need to fix this? I think Treasury's hit 5%. So, but the point is, like, the market will punish monetary authorities if they don't address and fix the issues at hand. And so there are levels at which Yellen has tapped out and said, I had enough. We can't sustain, levels of 5%. Like if yields were to get 5, 6, 7, 8, 9, 10%, where the market demands, if the US economy is growing at 10% and the market's going to demand, I want that 10% growth returned, and they can't afford that. And so I think there's always been the main takeaway is in watching the bond market is basically, if Yellen and Powell aren't going to do their jobs, then the market's going to force their hand on it. It's been that way for years now in this kind of like post-COVID era. The point is, if the Fed won't tighten conditions, then the market will, right? That's like the market is saying, F you, we want rates higher. That's, I think, is when Yellen stepped in and said 5% 10-year treasury, like we can't sustain that. And that was the recent bull run, was when she stepped in late 2023, when the 10-year hit 5%. And she came in, gave a bunch of liquidity. And that was when Bitcoin ripped from like Q4 in 2023 through Q1 of 2024 of this year. Bitcoin went from 20,000 to 60, 70,000 or whatever, right? And then, I don't know. So I think we'll see. Like if the Fed and Yellen don't do their job, then the markets will tighten conditions for them.
Jack cites Arthur Hayes' intriguing insights about the intersection of Bitcoin, money markets, and liquidity. Here's a quick rundown. Money market fund managers, who control a lot of global dollar liquidity, are currently navigating a tricky situation. With the reverse repo, RRP, yields at 5.3% and short-term Treasury bill, T-bill, yields dropping below these levels in mid-July, fund managers are shifting their investments between different facilities. Jack believes this shift is crucial because it impacts how dollar liquidity is managed. Jack highlights that when Jerome Powell hinted at potential rate cuts, it spurred investors to adjust their portfolios, which led to a noticeable drop in Bitcoin's value and affected the S&P 500. Jack shares the same view with Hayes and believes this reaction is tied to liquidity concerns, and anticipates that Treasury Secretary Janet Yellen will need to step in to stabilize things. Especially in an election year, a significant market downturn could be politically risky, so Yellen might take action to ensure liquidity remains stable. Jack points out that Hayes shorted Bitcoin in order to have Yellen address these liquidity issues. After a drop, Bitcoin rebounded by about 2 to 3% over the weekend, showing how quickly it reacts to changes in financial conditions. This is a good reminder that Bitcoin often picks up on liquidity shifts before other assets do.
Whatever's bullish on gold is certainly bullish on any other asset, particularly Bitcoin. How you can watch, Bitcoin's outperformance, or the stock market's outperformance, anything that's outperformed gold over the last, 10 or 20 years, and still be stubborn about it.
So I know Saylor and I disagree on this slightly. Like Saylor, Peter doesn't own a lot of gold, by the way. I think 5% of his portfolio is gold, so he's 95% short gold. By the way, 100% of my liquid capital is in Bitcoin, right? His point is, gold is money, and I compare gold to the euro, to the dollar. Everything else is an investment. So I'll invest a lot of my capital, and my money is stored in gold instead of the dollar. But it's like, yeah, but everything is up against the dollar. This microphone up against the dollar. So saying gold is outperforming the dollar is nonsensical and stupid. This mouse is better than the dollar. This water bottle is more expensive last year because it's priced in dollars. So like, that's not a real thing. But yeah, he's short gold with all the other shit he owns. He owns stocks. He owns real estate. He owns all sorts of shit that's short gold. So Saylor's point is you can't take the guy seriously. He's not even long and convicted on the thing that he's shilling. And I agree, but where I think Saylor and I agree is that, at the end of the day, arguably the best use of your time is educating people on Bitcoin. The difference between the world we live in right now and a far better world is more people understanding money and understanding Bitcoin, in my opinion. And you can understand Bitcoin and disagree with me, but I've never met someone that understands Bitcoin and disagrees with me on that. And so at the end of the day, if I'm ever asked to be helpful and useful and educating, I've educated the Salvadoran government. I've educated NFL players. I've educated a lot of businesses. I've educated a lot of individuals on the internet.
Ask the internet how much gold there is in the world. If you query Google, it returns an answer plus or minus 22.7 million tons. If you Google how much Bitcoin there is, it tells you 19,160. I mean, it tells you to the quarter coin every 10 minutes, right? You are storing value in gold when you're storing value in gold, you're storing value in something where we actually don't know how much of it there is. I don't see, I mean, Bitcoin is just a flat out better version of any type of store of value. Like I said, you want to store value for your great grandchildren. You're going to want it to be there 100 years from now. Probably real estate holds its value depending where it is, but there's certainly real estate, as you know, seizure, taxation, and there's also plenty of undeveloped land. But you can store there, precious metals. Yeah. But again, Bitcoin has just a far stronger store of value argument, because not only do you know exactly how much is extant currently, but you know the issuance schedule, you know how many there's going to be on any given date for the next 100 years, right? I mean, it's just a better store of value argument. But it depends unless you think there's a new use case for gold or something that, but if the trade is, fiat debasement protection, I just don't see a comparison between the two. One has a far more transparent issuance. Like I said, it's just a more it's just a more clear path towards protecting against fiat debasement than gold is.
Bitcoin analysts are eyeing an October breakout, despite the current market slump, partly caused by continuous negative outflows from the US Bitcoin ETFs. Bitcoin is poised for a significant breakout in October, according to analysts who are anticipating one final major correction before the next parabolic phase of the bull cycle. Could this be the last dip before Bitcoin's next surge? According to popular crypto analyst Mags, the Bitcoin bull run may experience one more pullback before the next major price movement. In a September 9th post on X, the analyst stated, "Bitcoin, last dip before up only." Since February 2024, Bitcoin's price has been forming higher highs and higher lows, indicating a long-term uptrend. However, Mags's chart analysis suggests a potential correction toward the $51,000 trend line before Bitcoin's next upward surge. Additionally, analysis of Bitcoin's Chicago Mercantile Exchange CME gaps highlights the possibility of a price correction to $54,000. The current Bitcoin CME gap ranges between $54,000 and $54,450, and gaps like these are often viewed by traders as potential retest zones, acting as support or resistance levels during momentum breakouts. CME gap analysis has become a widely accepted tool among Bitcoin traders, helping to pinpoint areas for potential trend continuations or reversals. Other analysts share similar views, expecting a final dip before the end of Bitcoin's current consolidation phase. Popular analyst Titan of Crypto expressed a similar sentiment in a September 10th X post, writing, "It's likely time for Bitcoin to wrap up this consolidation phase. History doesn't always repeat itself, but it often rhymes." With multiple analysts predicting a last dip before the next leg up, Bitcoin's movement in the coming weeks is highly anticipated. As we come to a close, what are your thoughts on Bitcoin and dollar liquidity? Please share your thoughts in the comments below. Share this video and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.